Hello and welcome to today's weekend market update. Today is 7th of January. You're looking at a daily chart of S&P 500. S&P 500 was up 2.28% to close at 38.95. Now the market rallied quite strongly on Friday on the back of the non-farm payroll report as well as the ISM report. The non-farm payroll report was, you might say, in line with market's expectation, but the ISM report shows that the economy is slowing down, and that's what the market focused on, and on the expectation that the Federal Reserve may not have to raise interest rate as much as needed. So that's why the market rallied. So if we look at the current pattern, what do we see? So I've got a channel right here. This is the midpoint of the channel. You can see that it had been consolidating at the midpoint for the last 2 weeks. And then we have this big green candle. It has basically broke out of this channel to the upside. Now the bears tried a couple of times to push it below the midpoint of this range, but the buyers showed commitment. They held the midpoint So the bears weren't able to push it below this level. If they were successful, then this pattern would have been bearish. But instead, the bulls managed to push it higher. Now it closed below this line. This line is 39.15. This is an area of resistance because it was support right here, resistance right here, resistance right here, support here. So this line is quite significant, this level. This level is 39.15. If it's able to get through this level, that means the bulls would be in control and they can possibly push it up to the top of this channel, which would be around 4100. But if bears manage to get it below the midpoint and hold it there, then over time the bottom of this channel comes into play. So I think going forward, events will decide whether or not bulls or the bears would have the upper hand. So let's have a look at what's coming up next week at least, to get an idea of how the market might move. So if we look at the calendar, next Tuesday, which is 10th of January, Fed Chairman Powell speaks. So when he speaks, market listens. So that could have some volatility. I'm not sure the Fed Chairman Powell would make any comments on Fed policy, but market would at least be interested in what he's talking about. Then on next Thursday, January the 12th, the CPI comes out. So this is the headline number, inflation. Last month, the inflation rate was at 7.1%, meaning prices of goods and services were rising at an annual rate of 7.1%. Market is expecting annual rate of inflation to fall to 6.5%. So that would be a fairly big drop. If you look at this chart right here, no, not this one, this one, yes. This is the inflation rate. You can see that since peaking in June at 9.1, the CPI inflation rate has been falling. So it's at 7.1 at the end of November. So we're going to get the December reading. 6.5 is what the market is looking for, somewhere around here, 6.5. Somewhere around here, 6.5. Now, if you look at December of 2021, you can see that inflation had ticked up because December of 2022 would be compared to December of 2021 to see what the change is in annual. So you can see that from November to December, inflation had gone up 6.8 to 7%. Previously, you can see the inflation rate had gone up quite a bit from 5.4 to 6.2 to 6. So the year-over-year comparison is friendly, and you can see that because inflation continued to rise in early part of 2022, the year-over-year comparison would be at least friendly. But there are other factors which will decide whether or not inflation comes down, but the market is expecting inflation to fall to 6.5%. So if it does come in line with expectation, you will see that from 9.1 we would go to 6.5, and that trend is likely to continue into 2022. So that's the headline. The core was at 6%. It's expected to come to 5.7. So if you look at core, you can see the high was 6.6 in September, and since then it's slowly moving lower. You can see the core was rising sharply towards the end of 2021 and early 2022. So at least the year-over-year comparison on the core would also be friendly. The next item to focus on the CPI is the monthly. How much are prices going up month over month? Last month, prices rose by 0.2%. Market is expecting prices to go up by 3.3%. So this would be above the previous month. So if you look at the month over month, you can see this was the 0.1. Prior to that, it was 0.4. So this in December, market is expecting the monthly change to be around here, 0.3. You can see for all of 2022, the monthly prices rose by at least 0.3% or higher. Now, 0.3% is actually is not good. If prices rise by 0.2% every month, your annual inflation would be 2.4%, 4.2. So that would be close to what the Fed's target is. So the Federal Reserve would not want monthly prices to rise by more than 0.2%. If it rises by 0.3%, then inflation would be above 3% annual inflation rate. So the 0.3 monthly, it would be above what the Fed would like to see. So that would not be good. But as I said, this is the average. So at some point, the monthly would need to remain below 2 for Federal Reserve to have confidence, because you can see here the monthly increases were well above 0.3. So that would be one report that I would be focused on, because that has the potential to move the market. So coming to our market, so let's look at what can we expect. So as I said, the levels are 3,800, which is the midpoint. If the bears are able to push it below this level and hold it there, then the bottom of this channel is around 3,500, which is basically October low comes into play. But if bulls are able to push it above 3,915, then I think the top of the channel is very much in play. Now let's have a look at the weekly chart just to see what we can learn from the weekly pattern. So this is what the weekly pattern looks like. Could this be a weekly higher low? That's one thing that I'll be watching to see whether this turns out to be a higher low. That's number one. Secondly, is this an inverse head and shoulder forming? So this is the left shoulder, this is the head, and this is the right shoulder. Could this be forming an inverse head and shoulder? So that's another thing to consider within this downtrend. If you look at the weekly momentum indicators, they are still negative. You can see MACD is below the 0 line and RSI below the 50 level. This green line is 50 level. So the momentum indicators on a weekly basis definitely are negative. But you can see that they have a upward bias. You can see price made a lower high and lower low, but looks like MACD is making a higher low, and you can see RSI is making a higher low. So over time, it looks like gradually the momentum indicators are pointing to higher prices ahead. So they're still not positive, but they're showing signs of moving higher. But I would see how this pattern evolves, which is whether this becomes a higher low and whether this becomes like an inverse head and shoulder. Now, let's have a look at the sectors that make up the S&P 500 to see what are those sectors telling us, if anything. The first one is XLK. This is the largest S&P 500 sector, technology. Technical picture, the chart doesn't look all that impressive. You can see that it has fallen below the midpoint of this range, and it's now consolidating. You can see the momentum indicators are also weak. MACD is below the zero line. RSI is below the 50 level. So the technical picture doesn't look all that great. On a weekly basis, again, the question is whether this turns out to be a higher low and whether this turns out to be a inverse head and shoulders pattern. So in coming weeks, we'll find out about it. You can see the momentum indicators are weak. MACD is below the 50 level. RSI is MACD is below the zero level. RSI is below the 50 level. So technical picture does not look positive to me. If I look at the next sector, which is XLV, which is the second largest, so you can see, so this is the daily chart. You can see big run up and now it's kind of consolidating. If I look at the weekly chart, you can see that this one has like a bull flag kind of a setup. You can see the big run up, now consolidation. You can see MACD has gone above the zero line, RSI is above 50. So this one looks more positive than negative to me. If that is the case and it's able to complete its consolidation and move to the upside, then this puts upward pressure in S&P 500. Next up would be XLF, which is financial. So you can see a big run up from October to December, correction to the midpoint of this channel. You can see found support in the middle of the channel, and now it's moving higher, took out resistance here, took out downtrend. Daily basis, the momentum indicators are now moving higher. On a weekly basis, this chart looks actually quite positive. Could this be a higher weekly low? And could this be kind of an inverse head and shoulder? Possible, something to keep an eye on. You can see the weekly MACD is crossing above the zero line, and weekly RSI is above 50 level. So the weekly chart looks more positive than negative to me. And if that's the case, and if there is further move to the upside in XLF, maybe towards the top of this channel, this puts upward pressure on S&P 500. If we look at XLC, which is communication, you can see the communication has corrected and then it's now moving higher. You can see on a daily basis, the momentum indicators are starting to move higher. If I look at the weekly basis, it looks like it's forming kind of a base right here. The momentum indicators are still weak. You can see that MACD is below the 50 level and MACD is below the zero line and RSI is still below the 50 level. But I'm beginning to see a basing pattern forming. So if that's the case, and if there is further move to the upside, that could put upward pressure on S&P 500. So this one is looking quite interesting to me because it had a big drop and now it looks like it's kind of forming a bottoming pattern right here. So in coming weeks, we'll find out whether or not this leads to anything meaningful, or it just basically fades away and then heads lower again. But this is looking constructive to me, XLC. So I'll keep an eye on XLC. So you've got Facebook, Meta, you've got Disney, you've got Netflix, all of them in this sector. Next up is XLY. Now XLY doesn't look all that impressive because you can see it's been heading lower, but 40% of XLY is Tesla and Amazon, and we know that Tesla and Amazon got hammered in December. That's why you see that it had fallen sharply. But if you look at the discretionary sector in general, it's not as weak as XLY is saying, because this index got pulled down by primarily Tesla and Amazon. But if those two stocks, having fallen sharply, start to stabilize and recover a little bit, then we could see XLY move higher. You can see that momentum indicators are beginning to move higher. So if there is any upward move in XLY, that should put upward pressure in S&P 500 as well. And obviously, if it continues to move lower, that should put put downward pressure at S&P 500. But I'm seeing that the momentum indicators are suggesting that they may be a little bit more to the upside. Next up is industrials XLI. You can see big run up from October to December, correction for 2 weeks, and now it looks like it wants to move higher again. So if there is additional move to the upside, then this should be positive for S&P 500. You can see big run up, more like a bull flag consolidation. Now it's moving higher. Look at the MACD. It has crossed above the zero line, RSI above 50. The weekly chart looks more positive than negative to me. So if there is further move to the upside, that should put upward pressure on S&P 500. Next up is XLB. This is building materials. The weekly chart, again, big run up from October, correction to the midpoint of this channel. So if you look at the daily basis, you can see it corrected to the midpoint of this channel. And then after spending a couple of weeks here, it broke to the upside. If it goes up, towards the top of the channel, this should put more upward pressure on S&P 500. You can see the weekly MACD is crossing above the zero line. RSI is bouncing off the 50 level. So again, this weekly chart looks more positive than negative to me. I think those are the key sectors I'm going to look at. Oh, maybe I'll look at XLP, which is another. Again, look at XLP, big run up and then consolidation. Maybe this is a bull flag consolidation. Look at the MACD. It's crossing above the zero line, RSI above 50. So this is again looking more positive than negative. So of the sectors, I mean, if XLK can get into gears and XLY, I think this could S&P 500 looks like may have a little bit more to the upside. I see that most of the sectors have a positive chart pattern, with the exception of XLK and XLY. If XLK and XLY see some buying pressure, then I think S&P 500 could rally a little bit more. I mean, based on what I'm seeing in other sectors, I see that there is more positive than negative. What about the other indices, just to see what they're looking like? So next up, let's look at Dow. So this is Dow Industrials. So if you look at Dow, you can see that big rally broke through this downtrend, back test, and now it looks like it wants to move higher. If you look at the weekly chart, you can see that momentum indicators are actually positive. MACD has crossed above the zero line, RSI above 50. So Dow looks like more positive than negative to me. If I look at Russell 2000, so this is the small cap. So if you look at the daily chart, you can see that correction, consolidation, and it has broken out of this balance area to the upside. You can see the daily momentum indicators are beginning to move higher. On a weekly basis, could this be a higher low? So this is the previous weekly low. Could this be a higher low? Something to keep an eye on. But the momentum indicators on a weekly basis are still in negative territory. MACD is below the zero line and RSI below 50. But I would look to see if there is any kind of improvement, whether this ends up being a higher low on a weekly time frame. If we look at NASDAQ next, again, NASDAQ on a daily basis, I think of the four, probably is the weakest one. So I've got a channel here, kind of basing at the bottom of this channel. Strong move up on Friday, was up almost up 2.78. Now, there's resistance right here around 11,500. If it's able to get above this level, then the top of the channel would be the logical place to go to. But if this level is broken, then obviously the October low and possibly even lower would be the price target. On a weekly basis, the question is whether this ends up being a higher weekly low. So something to keep an eye on, but the momentum indicators are still weak. So of the four, the major averages, I would say NASDAQ would be the weakest of all. So I would look at the sectors in S&P 500, because S&P 500 sectors are telling me there's more bullish patterns than bearish patterns. But again, next week the CPI is key. If the if the reaction to the CPI is positive, then we could see further gains in S&P 500. But if it's negative, then I would look for that 3,800. What about the yields? So if I look at the yields, so this is the Fed funds futures for June. So it closed at 4.95. So market is basically expecting Federal Reserve to increase interest rate to 5% by June of next year. Fed funds rate are at 4.5 at the moment. Now, Federal Reserve said that they would take the interest rate above 5% from the dot plot, but at the moment I'm not seeing any market yields above 5%. Now, Federal Reserve may change their view in the next meeting because they're going to see a couple of more CPI prints before that, so they may change their expectation. But at the moment, market is not expecting Federal Reserve to increase interest rate above 5%. The 10-year yield fell 16 basis points to close at 3.56. You can see that it's making this higher low at the moment. You can see that momentum indicators are moving lower. On a weekly basis, you can see that momentum indicators are also moving lower. So it's suggesting that yields are likely to move lower, not higher. 2-year is kind of flat. The 2-year is it fell almost 20 basis points to close at 4.25. It's just basically in this range between 425 and 450. Perhaps it's waiting for CPI or other events which will decide whether or not what the next move would be. But for the time being, it's just holding steady. Dollar continues to remain weak. I've got this channel. It moved to the middle of this channel and then sold off on Friday. It was down over 1%. On a weekly basis, if I look at it, I see that the momentum indicators are still weak. MACD continues to move lower. RSI is now below 50. So weak momentum basically means that we're not going to see any significant move to the upside. If it goes below the zero line MACD, that would not be good at all. You can see right here, once it fell below the zero line, it stayed below the zero line for some time. If it does that, then we are unlikely to see any kind of significant move to the upside. So I keep watching what happens to the momentum indicators. At the moment, the momentum indicators are negative. If we look at gold, gold is doing just the opposite. Look at the momentum indicators, very, very strong. MACD, weekly MACD, which was moving lower across, now it's moving higher. It looks like it wants to go above the zero line. Look at the weekly RSI, it's moving higher. So this is showing bullish momentum. Obviously, it needs to get through this area of resistance, which is around 1880, 1890. If it's able to do that, that would be positive. So I would look at the momentum indicators and see whether or not it's able to clear the zero line completely. If so, that would be really, really positive. If I look at oil, so this is oil. On a daily basis, you can see I've got this downward sloping channel, struggling to get through the midpoint of this channel. You see a couple of rejection. Bottom of the channel will bring it to around 70. Momentum indicators are weak. You can see on a weekly basis, MACD is below the zero line, RSI below the 50 level. Even if you look at a monthly basis, you can see on a monthly basis the MACD is crossed and it's now moving lower. RSI monthly is below the 50 level. That does not look good even on a monthly basis. So on a higher time frame, oil looks more bearish than bullish to me. If I look at VIX, so what do I see in VIX? On VIX, again, momentum I see weak. You can see that MACD is below the zero line. So this is on a daily basis. Even if I look at the weekly basis, you can see MACD is crossed. So if I just zoom out, you can see that it has crossed and fallen below the zero line. So not seeing any kind of turn yet. RSI on a weekly basis is below the 50 level. So far it's not looking like it wants to go higher. Even on a daily basis, you can see that MACD is below the zero line. RSI is just fallen below the 50 level. So it doesn't look like it doesn't look bullish to me. If I look at some of the ratios, one ratio I want to look at is QQQ versus SPY. This is QQQ versus SPY. QQQ being growth versus SPY being value. So this is a monthly chart going back to 2008. So I've got this long trend line. So you can see number of touches. And you can see that this ratio is now coming to this trend line. You can see that since 2016, the growth stocks outperformed value significantly to the point where it had gone significantly above this trend line, which you might say is an equilibrium point. So this correction in 2022 is bringing this ratio back to you might say an equilibrium level. So that actually is good, because when something like this, when an index goes away from its equilibrium level, that means that there is quite a bit of complacency, frothiness. So some of that is correcting and it's coming back to historical norm being this uptrend line, because this uptrend line, it has touched a number of times. So it's coming back to this, so we'll see whether or not the growth stocks are able to then bounce off this trend line. If so, then we might see QQQ and NASDAQ start to outperform SPY and S&P 500. At the moment, they're not. That's because this ratio is continuing to move lower. But we'll see whether or not there's any kind of reaction when it comes to this long-term trend. Just to finish, S&P 500 next week is very important. We've got CPI coming up, Fed chairman talking. The question is what would be the reaction of S&P 500 to CPI? If the reaction is positive and it's able to get through 39.15, then perhaps 4100 would be the logical place it can go to, which would be the top of this channel. But on the other hand, if the reaction is negative and the bears are able to push it below the midpoint of this channel, 3800, and there is acceptance, then I would expect lower prices ahead towards the bottom of this channel. After the next week, earnings will come out, the fourth quarter earnings, that will have an impact. So that will decide what happens to S&P 500. A lot of people are expecting a flush down to 3200, 3000. Well, to do that, we need some catalyst. Is the earnings going to be the catalyst? Is the CPI going to be the catalyst? We'll find out. So let's focus on next week and see what the market's reaction is to CPI. Thank you very much for watching the video.